Good morning, everyone, and welcome to the European crossover webinar. Obviously, the news of the day is we're starting to see a push on the euro dollar, which is actually on its highs. This actually started in the Asian session. We were, finished the New York session really on the weak side, and then we just started going and start moving this thing higher. We're going to move into there. I mean, the news overall hasn't been that great. See here where Vibin was saying the stronger coordination of possibly between Europe and the U.S. is not a goal in itself, but they mentioned essentially without the IMF coming in, they don't see how they can get the Greece talks done. So let's take a look in here. See, a German Fin Minister spokesman says, in our view, the IMF's participation in Greek debt talk is required urgently. And Sipper says he's optimistic they can reach a deal with the creditors, but once again, everything points towards essentially Germany saying in order for things to get done, the IMF has to go and step into place. But we've seen this rally back here in the euro. And obviously, I think it's a positioning standpoint because first they kept selling the rallies in here. I myself was selling the rallies on this thing, but not that actively. And each time they would try to get a rally, it would fade. Even going into New York session, it looked at the end of the New York session, it looked pretty terrible. But in the Asian session, we got pulling up a little bit, down to the 30s, and then next thing we're in the 50s, and we're just at this point squeeze them a little bit higher. But the odd thing is that the news isn't very good. Now I do see here where the German Bund yields. Take a look at something real quick.
Just going back to European equities, we are now right across the board, although 3100 does continue to outperform.
Okay. German Bund yields are doing okay, so it's kind of like a bit of an anomaly in the sense that the news for Greece isn't good, other than Germany is really pushing for the IMF to get involved. I think it's just a positioning standpoint, but we're going to move into the euro dollar quickly, just to go and take a look technically how we stand there. I'm going to switch over the screen there. So here we are here in the euro dollar, and let's go on and take a look fib-wise how we stand on this. Hang on. Well, the 38% here would be 1217 right in here. That'd be the 38%. So let's go on and tag that out real quick. I would think that most everybody that needs to be stopped out would be, potentially already stopped out. So I'm not sure if you can get much further than 12 if you've already probably knocked out quite a few people. Hang on. So we had challenged this area yesterday morning about the same time we were on the webinar. this 1179, I think they made it up to 1182, and they backed off of that. Now we were able to get above that. Now we went up there and backed off of the 1179, stepped back just a little bit, and got back above, and here we are at 1195. I'm just not sure, even with 1217 being at 38%, I'm not sure they can goose it too much further, other than maybe if they've got some people that are short that didn't have any stops that came into the New York, as we roll into the New York session. Take a look here. And 1214 would be the 127%. So let's go and mark that off. So definitely a bit of a confluence right there. Hang on. Yeah, I think, like I said, they have to get that deal done. That's what I was stating, is that there's no way that Greece was going to go on and play ball and just say, they'll agree to an extension. An extension was not never going to do Greece any good. Now's the time to go on and make the most of it. And this is the one time that they have a little bit of leverage in my book. So that's why I thought that, Greece is just going to, hey, look, you can't make it. We can't get a deal done, and we will not be paying the IMF, come that early June payment. And the Eurozone at this point is not in a position to withstand what will come out of Greece if they ended up defaulting. So that's why now you're seeing this, what they call a sense of urgency, or what German finance spokesman is saying, the IMF's participation in the Greek debt talks is required urgently. And I bet it is, because they know that they're not going to get this deal done. This 1217 is at 38% of 1063 to 1468. Okay, and then 1214 is 127% of 1063, 1182, and then of course we have this 1201. I'm just not sure they can get very much further beyond this area. We had discussed this yesterday. I didn't think they'd get much further, because I knew this 1179 was going to be tough, and it did turn out to be pretty tough throughout yesterday. Obviously, they're getting going and got them up to 1204, 1205 right in here. I'm just not sure that they can do much with them beyond here. I think you've already probably spooked a lot of people at this point, but that's where we stand here. We're just barely nudged above 12, so I guess they're trying to squeeze them for what they're worth. But I'm not sure they can get too further beyond this, other than maybe as you touch in the New York session, they may want to try and clip above it. I'm just not sure if we can get too much further. I think it's more of a market positioning standpoint, because you might have caught a lot of people. I wouldn't have expected they could make it up here, but caught a lot of people flat-footed, and that's why they're pushing it for all it's worth. Let's go on in here. Let's take a look where we stand here on the 30-minute. And here we got that same 1215 right here. And then beyond that, 1237. They're squeezing. They hit that 12. I just don't see where there's going to be very much for them to go beyond that, unless the Greece news all of a sudden everything gets resolved. And I think this move has more to do with the market being caught flat-footed, and they're squeezing a lot of people than anything else at this point. We'll have to go in and see, but I'm just not sure that we're going to have very much legs left on this run at this point. It's been a hell of a run because as we did the New York session, we were, I think it was about, I think we were about 11:11, well, about 11:14, I think it was. And then just after the New York session, they actually dipped and touched 111, I think it was, or 11:01. And then from there, we just started to work higher. And I saw them in the Asian session when they were here in the 30s, and they made another run. Actually, I had woken up and they were, because I'd gone to bed early, battling a little stomach flu, and they were here at 52, and I scalped them short, but I put in a real, just a limit here for, I think it was 44, I think it was, because I was feeling pretty bad. I had to go and catch some sleep. She said, you know, I'll just grab them. I go, I'll probably regret not hanging on to them, but what the heck. And then once again, like I said, and they dipped a little, just actually about that area. They didn't move much. And then to my surprise, like I said, I saw them there at 11:71, and I've been getting a lot of rest. So next thing you know, here they are, scooting and booting, or booting and scooting on the way up. So that's what we have here in the euro dollar. I don't know how much further they can go in and squeeze them, but that 14.17 is going to be an area that they want to go and run to. This 12.15, potentially. I'm not sure if they'll be able to make it now. They may be able to make it in the New York session if they want to squeeze them a little bit further, but we'll see what that's made up of. And let's go on and move in here into the SPOOs and see what's going on there. So here we are on the SPOOs, and we finished at record highs yesterday, but we're still back here. We're being held by this range extension, this 3150, and just above that is at 127%. I can move this here. But there's just not a whole lot going on. I mean, well, there is in the sense that we've come back up to the range extension, but we haven't not yet been able to get beyond this. And we've already discussed that for anybody that's new. That range extension I had on the 30-minute, which was 81.75 to 98. Well, that's 2081.75 to 2098. And then all I did was extend that, and that took us to 14.75. And that 14.75 on the way up to, at the time, which was a high, which was, I believe it was 17.75. That capped the market in here. For the most part, you can see how they danced around that 14.75 in here before they faded. We'd put this high in here at 17.75, which was a high at that time, and then we spent part of the week, the early part of that week, dancing in here, and then we faded them and took them lower, and that actually held them again in here. And all I did was extend that extension again, and that gave us the 3150, and we were looking for that. When we made this high up in here where the market kind of ran out of gas, I thought we might make that move earlier, but we had that bad China news, 2 or 3 weeks back. And but now here we are back again. That 3150 is holding it up pretty well. I had taken actually a short the other day against that 3150 and squeezed off. I think it was about seven handles. But once again, we're here at this 3150. I'll still say the same thing. I just don't see the upside impetus, or I don't see the catalyst for an upside move beyond here. And then just above that, you have this 3650, which is 127% of 56.75. This move here to 1975 right in here, and that 3650. So far, it's capping it. once again, I think that we're going to go eventually over time. We'll go higher. But I think that we're going to go on and see a pullback, and I'll still stick to my guns, is that Eventually, I see a pullback when we do get it to 1975. But I'm not in the camp like the bozos that are looking, that have been saying it all along. We're going to 1500, we're going to 1700, we're going to 1800. That stuff's not happening. The economic numbers and the variables are just too good for us to go on and make that move lower. And that I'm saying those guys just don't understand. So you're crazy if you're listening to those guys, because they literally don't know what they're talking about when they keep going on about how we haven't had a correction, and oh my goodness, we're going to get this correction to 1800, 1700, and you need to stop listening to those people, because they really just don't understand what's happened, and that's why they've stayed as continuous bears throughout this whole time, and you can't tell me they haven't been getting their clock cleaned, okay? And I know quite a few of those people, okay? So we'll go and take a look at here where we stand here on the 30-minute. So here we are once again, coming back here and touching this 30-50. Did the same thing. Once again, not able to get past in any real way past this 30-50. But just above it, I told you the 3650 is going to be that 127% extension from 5620, 5675 to 2119.75. So once again, we'll probably, maybe we may not even be able to work too much lower, but I'll still go and stick here that eventually I think that as we start to correct a little bit with the sell in May go away, and obviously I think Mr. Topstead was even saying it may not be sell in May and go away, it might be sell in June and then go away, but I think we'll go in and eventually make it down here to 425. It's not even going to be very much. Just think that here you might get to a point where the market believes on a very short-term basis that we've reached a double top right in here. And then from there we go in and work a little bit lower. And if we take a projection here, let's take a look here. And this is on the 30-minute S&P. 161% gives us our 425, which is exactly what I'm looking for. So let's mark that off. And that's so you got a little bit of a confluence here. So provided that they can't make new highs today, they're going to go on and consider this to be, and 1025 is going to be the 127% extension. So let's just go and mark that off. So once again, as I was saying, is if they're not able to go and take out these highs, then they're going to go and consider this area to be a double top. I know we've got the spike here, but I'm just saying, where you actually saw some real action in here. So they're probably going to see this as a double top. Some people might want to go and say, well, actually, it's a triple top. But anyway, then people be looking for the downside. Obviously, 1475 is going to be key. We talked about that, them overshooting that a little bit. We could maybe even tag down to 1175, but 1025 will be the 127% extension of this move, which is going to be 32 to right here, 1475. And then 161% will put us right here at 425, and that puts us here at this level. And this is where I think that they will want to make it to. But like I said, the market's held up really quite well. I just don't see the catalyst for an upside move at this point. But obviously, the big news of the day is going to be the deal with Greece. Jumping back to that. Hang on one second. Okay, and Andy says, hey, Paula, do you think it's possible the EU finance minister have decided already that Greece will default and that these meetings are trying to agree and minimize the damage when it occurs? I don't think so. Here's my thing, Andy, is that I was commenting on Twitter yesterday. I think I saw where yesterday, I don't think it was Moscovici, but I don't know which guy was saying, we might be able to give Greece an extension. That's the craziest thing. No way Greece is going to go for that, because right now Greece is sitting a little bit in the driver's seat, just a little bit. They've got a little bit of leverage. For them to get an extension would be crazy, because it's better to deal with this right now. And I think that Greece, and I said that yesterday on Twitter, is that even though they basically robbed Peter to pay Paul, in the sense that they took some money from the IMF and then used it to pay back the IMF. They're going to say, essentially, and a lot of people said, I even saw an article from the Financial Times saying they can't believe how Greece is somehow, some way, they've found every cookie jar they could pull some nickels out to go in and make these payments. And I think, and Greece has already said that, hey, look, if push comes to shove, we're not going to make this next payment. And it's actually two payments. I think it's June 5th and June the 12th. And I think each one's like, one is $305 million, and the other one I think was like 300 or something like that. And they're saying, we're not going to make it. We'll just pay the pensions. And I think in this case, you have to see it from I've been critical, but you have to see it from Greece's point of view. At that point, it's like, how much, we're not getting anything for making these payments, so to speak, and we're pulling all the money we can, and we can't find any more money. Even the states within Greece are saying, we're not going to allow the government to touch our money, so we'll just default. And right now, at this point, the Eurozone is just barely coming out of that funk that they've been in for years. Right now, they can least stand a big disruption that would come out, a fallout will come out if Greece were to go into default. In the fall, they'll be in a lot better position. That's why it does not do Greece any good whatsoever. Not to mention, it'll be hanging around Cyprus' neck the entire summer on what's going to go and happen. And it'll be just another showdown in the fall. And there's nothing for Greece to gain by agreeing to an extension at this time. So I think by the German finance minister saying it's urgent that the IMF participate, it's already telling you basically, I said that yesterday, that don't play a game of chicken with Greece, because Greece is going to be for real. They are not going to make the next payment. There's no way, if I could take the other side of the trade, I'll be more than happy to take the other side of the trade. Greece will not make that payment. So now that's why you're seeing the German finance minister shaking in his boots, because he knows they're screwed. Okay, the Eurozone is screwed if Greece is allowed to go in default. And there's nothing in Greece's benefit by them agreeing to an extension for the fall, as one of the finance ministers said. I don't remember if it was Moscovici, if it was Kerr, but someone said that we could maybe look. You're crazy. There's no way Greece would agree to that. Greece has just a little bit of leverage right now, and they got to milk it for all they can. And Greece is serious, in my book, if they can't get a deal from the creditors, and the creditors have already said, no way, they will not take a haircut, they will not make the payment. And I believe Greece won't make the payment. And in this sense, I'd have to agree with Greece not to make the payment, because they're stuck beyond a rock and a hard place. Unless they can get any real solution, there's nothing in advantage of Greece to pay the money. Absolutely nothing. So let's see. Rich says, it occurs to me I'm quite bullish the euro-dollar. I think it's going to hit 12.50. What are your thoughts? Apologies if you covered this in the first 15 minutes. Yeah, we already covered the euro-dollar. We're going and just move over to that real quick, though. But we quickly went into that. We didn't cover much news. I spent most of the evening and all day, most of the day yesterday, sleeping quite a bit, had a bit of a stomach flu. I rarely ever get sick, and then, here I get whacked almost back to back from a bad cold and then to a stomach flu to boot. But hang on one moment. So here we are in the euro dollar, and here's the key thing is, and I'm alluding to this. I think today was about market positioning, and I always use that. I told y'all, market position analysis. I did really well trading the crude oil for I think it was like a 2-month run almost, basically just using market position analysis. in the sense that I figure like who's on the wrong side of the tracks at the wrong time. And so here's the deal is that, you know, yesterday here on the webinar, we were live when we hit this high. I think Jan was asking about it, if I believe at the time. And when we hit this high, and I said, I think that the market's going to have a hard time getting beyond this level. And even Blake asked and said, what do you think? I go, well, I think it's still going to have a hard time, just this 1179, but above here we have 1201 and 1223. So that worked out and held pretty well throughout the day. And the market, on every rally, the market would just sell it right back down, sell it back down. And there was a rally late in the day that took us to like about, I think it was 1140, and the market started smacking right back down again. I said, hey, look, it looks like the bulls are using those rallies to get the hell out of Dodge. And we started working lower, and I think we finished the New York session like around 1114, I believe it was. And then just right after the New York session, we got to 1111, 11 in the single digits, and then we made it down to, I believe it was 111 straight up, okay, right here. And then we just started working higher, just little by little, which really wasn't any surprise because that's what the Euro's been doing. But in the Asian session, it just started gathering a little bit of steam. And I think what we've done is a lot of people got short in here, right in here in this area, and I think the market's just thinking we're going to squeeze all those people out, anybody that hadn't used stops or whatever. Although I think any moves above 12 are just going to have a hard time to get past it. I mean, you might have some people in the New York session and maybe they can squeeze beyond it. I just don't really see it. And the problem is the Greece news, the news coming out of Greece has not been good. And I'm saying not out of Greece, but in regards to the Greece talks. It has not been good. I mean, Sears is being positive. He's saying, you know, and yeah, matter of fact, he even says that. Here it is. He says, a debt extension could help Syriza, but hurt Greece. And yeah, there's no way that they're going to agree to that extension. That makes no sense. You got to get this thing over and done with. And Greece is in the best position right now to make something happen, okay, in their benefit. An extension is not going to help them. And I can assure you that Germany, beyond all other countries, is going to be making all kinds of provisions for Greece to depart in the fall if they were to give them that extension. So Greece will be in a world of hurt. Not to mention, they'll have the sword of Damocles hanging over their head the entire summer. That makes no sense. So that's what I'm saying. The news coming out is still bearish. And one of the reasons why I think that the market was having a hard time hanging on to these gains, because they know that news coming up in Greece is really, really bad. So I think this has to do with market positioning as far as this move. I don't see the 1250 at all. If you were trying to get up there, it'd be this area right here, which is 1272. Frankly, I just don't see it. I think where I would have seen it is if post-FOMC, if we had taken out that low of 1063 and cleaned out some stops and maybe made a run, we may not have made it all the way to 1033, but maybe made a run down here like in the 1040s and rally, then I would have believed we would have made it back up to 1272. But it's because we didn't take out that 1063 on the FOMC release is what gave me a bother and why I didn't like this the whole time. And ultimately, the euro kept giving back its gains. Today, I think it's just about market position. If this move had happened in the European session, I probably would give it a little bit more credence. But you already started seeing the market edging up in the Asian session, and it just kept edging up, edging up, edging up, edging up. And I think it was just squeezing people, and they're squeezing for all it's worth. But the problem is the news is still horrible as far as dealing with Greece, in the sense that I think that they're going to push it for all it's worth. And unless they give in over the weekend, and I'm not talking about Greece, I'm talking about everybody else, this is going to be bad. I'm just telling you right now, it's going to be pretty tough in here. So it's not in Greece's best interest to, and you're looking at really realistically about 2 weeks for this to go on and happen. So that's still going to be hanging. So I would not be surprised for us to see us right back below 1179 and push them a little bit lower. I'm not sure. And you've got 1201, you've got 1217 to 38% of 1063 to 1468, and you got 1214 to 127% of 1063 to yesterday's high of 1182. So you got a lot of overhead resistance right here in this area, which I think they would have a hard time getting beyond. But I wouldn't be surprised to see the market start to give back those gains and people start to lean on it at that point. Let's let's take a look. Let's go in and switch them out. Let's go in and switch in here to, let's take a look and see how we stand on the 10-year note. We'll switch on over to crude oil also. Let's switch over. Oh, Tiago says gold, please. Okay, we'll switch over to gold. Oh, hang on. Well, here's gold, and we had talked about this, is that on the FOMC, man, it had to hold this 1200. I thought they would be able to dip them below 1200, and then I was saying, put your limits between 95.50 to 98, and they better get up. Then they better be above 1200 by the end of the day on FOMC. But they didn't get below 1200. We've worked higher. I'll still say the same thing. I really don't believe this market, but we're still going to go and take a look at it. Let's see where we stand right now. Let's back this up to see where we stand on an overall perspective. See, we don't really flip this into a real buy overall until we get 2 consecutive 4-hour closes above 1239. And 1239 is huge. You can see this. Look at this. 1239 is freaking huge. If you get 2 consecutive closes above 1239, then you know that we're on our way. But that's what it would take for this market to do that. Unless the dollar starts fading fading again, I'm just not really seeing that at this point. This here. And let's take a look at where we are on the fib. $12.16 would be the 120 would be the 50%, and $12.19 would be the 61%. Let's go mark this off real quick. I think it's just a trading market at this point. I don't think there's anything special about it other than that. So if you're just looking at it from a trading perspective, yeah, go on and play it and take advantage of it. I just don't see that it has, I don't see anything beyond that to give it that extra 1, 2. I think it's all technicals at this point. So if that's the way you want to look at it and you just want to trade it that way, then fine. I think that's smart to go and do it that way. 12.16 is going to be the 50%. Unless the dollar gets whacked today, I don't see where Greece goes and takes off and does. I mean, gold goes and takes off and does anything. And you can see right here that you've got 19 confluence in here with this 1950, which is a 61% of 1201 to 1231 right up here. So, and 1216 would be your 50%. And right now you're going to have a level right there. Should be right there, 1216. So let's go move this here. It's actually 1630 is a level, so let's move this here. Right there. That's 1620. And then 16 right there. As far as the trading market, it's good. I'll give it that. Right now, other than that, I wouldn't place too much on gold. But that's what you're looking at just ahead. So you've got this level 1620, which is confluencing with 1216, which is a 50% of 1201 to 1231. And just beyond that, if you want to squeeze them a little bit higher, this is going to be a pretty decent little zone in here, right here, between 1620 and 1900. Now, 1950 is a 61%. If the dollar were to come, well, we've got the euro right now at 87. Like I said, I wouldn't be surprised if it fades back in a little bit. I think it's just market positioning that got us up there. Because this news with Greece is not good. In Greece, you know, from a tactical standpoint, I'm with Greece all the way. From a tactical standpoint, they gotta milk this. They gotta make this. They gotta make this for all it's worth. Push it for all it's worth, because they've got a little bit of an upper hand. Because the eurozone is in a hell of a place that they cannot afford at this point. They cannot take the punch to the gut that would emanate from Greece defaulting. In the fall, it'll be in a lot better position. That's why there's no way in heck that Greece should go and agree to any type of an extension. So anyway, but getting back here with the gold, those would be your targets here, 16 and 19 essentially. 1620 is this level here, and 1216 is a 50% of 1201 to 1231. And then just beyond that, if you want to squeeze it a little bit, let's say you're long from down here and you're saying, yeah, you know what, I'm going to ride it going into a Friday, then fine, then you know, take them up here to 19, with 1950 being the 61%. And then I'd be looking to go on an exit, because I don't see anything. Now, obviously, if the wheels fell off the caboose with Greece, then that could spark a risk rally and maybe cause Greece to rally over the weekend. I don't see anything that's going to happen with Greece over the weekend, either to the positive side or to the negative side. But certainly the risk is to the negative side with Greece. Oh, wow. Oh, wow. Already time for a break. Wow. Hang on a moment. Okay, everybody, welcome back to the European crossover webinar. Let's go and move into crude oil. I do see the notes are moving up, so we'll see if we can get enough time for that too. But crude oil made this visit right here, right into this zone that we've had marked off since Monday, this 60.86 to 61.22. Just move this in here a little bit. So you can see here, we made this run down here. We made the run right here into the zone here, right into the 60.86. We talked about this as we came into the trading on Monday morning. I said that any forays above this zone were likely to be short-lived, and that all played out. We had a pretty nice sell-off here in the market. You know that we're looking for just sub 56. We're looking at right here. Right here is 55.93. Let's move this over here. And 55.84 would be the 161% of this move, 58.13 to 61.84. 161% would put us at 55.84. We can move this over here. There we go. So we're starting to see the market going and break down. We made the run into this zone. We pulled back. Market held up pretty well overall. I think they were just, we talked about this yesterday, is that I think that they were just squeezing people that came in and started selling the market too early. Once again, it goes back to the same thing, what I call market position and analysis, in the sense that when we got down here and we broke it here, a lot of people were still thinking we might work higher. And I think that the market, when we broke here, they thought, you know what, this is it. It's over with. Now we're finally going to start breaking lower here in crude oil. We got down here, and the market stayed quiet for quite a while. It was just, not a whole lot happening. And so I think people thought, you know what, this is it. We're probably only going to rally just a little bit, and we're probably going to all fall apart, and it's all going to come undone. So people started selling up against here, and we got up here, which is right here in this 38%. The market, and we actually pulled back a little bit, but we didn't pull it back very much. We took it in here at 59.83, and the same thing. The market stays quiet, and then we take off and run them up pretty strong here. And I think they were just squeezing people here as we got up here. But when the proof comes in the pudding when you hit these levels, and essentially that's what we got here. And I was surprised that they were able to make it all the way back here into this zone, this 60.86 to 61.22. I mean, I was quite surprised because not only did they make it back up here, they held it up here. It was trading in the 60s, 70s. I scalped against it. They're holding it here pretty good. And then even when they did back in here to 60.25, they quickly ran right back up in there. And I was thinking, man, that is really something else. They were able to do that. And then from there, you can see here that the market's been pretty quiet, sitting in there in a very, very tight range. And now all of a sudden, finally, it's starting to go on break. But you can see here that we came back here to test this flag. We got back a little bit above it, and we came into this zone, but we certainly couldn't do anything with that. And now we're just starting to kind of roll over. And I think once again, we'll still start to see lower prices, going forward here on the 2-hour. I guess if we're looking at targets to shoot at for, let's go and do a quick fib. $59.79 is going to be the 38%. So let's go and mark that off. And that confluence is here with 59.83. Right there. So that would be a good target right here. This 59.79 is going to be the 38% of this low, which is 57.93. To this high, which was 60.95, and then right here with this level, 59.83. This is what I think that the market would want to go on and shoot for initially. Although I think overall, I think that we will go on and work lower, and in time, we'll make it down here towards the $56 move here in the crude market. I don't know what the heck that sound is either. I don't know. I've got two systems running. I don't know if it's the Mac Pro or the other system. But I keep hearing that doggone doorbell sound. I have no idea what that is. It drives me crazy. But anyway, let's see. Oh, okay. Liz says, so you don't think we're going to just bounce around the 58.25, 61-ish channel? Oh, this is what she's talking about, this channel. I've got here 58.33. We can back this up a little bit more to see it. No, I don't think so. I really don't think so. But it's a good point, though, you're looking at. So Liz is saying, you don't think we're just going to bounce between 58...
Any comments from Carney, so that's Governor Carney, speaking on a panel discussion at the ECB event in Portugal. However, it's worth bearing in mind that there is no text expected.
So anyway, so what Liz is saying is, don't you think that they're just going to go on and bounce around here from 58.25 to 61-ish? No, I really don't think so, because at least from my work, I could be wrong. Like I said, I could be wrong as all get out. But we've already had this run up here, and that's why I came up with this zone when I was doing some work, the other day, or well, not the other day, but last week, and I was trying to see like, what is this? Where is it where I can see something happening where I can, something could be sparked off of, and that's how I came up with the 6086 to 6122. And then I saw this flag in here, and I said, okay, look, I think they're eventually going to make it down to $56. I think it's been way overdone up here. And if you look across the board, China's been slowing down quite a bit, and a lot of other economies, even the U.S. economy is being called into question. I think that we're just overdone up here. So I think that they will make it to $56. I think that you can see here, they made it down to 58.33. They overshot it, made it down to 57.93. I'm not saying that that's not going to be a pit stop. I was even surprised they were able to make it back up here. Did they? I mean, the idea that they bounced off of 58.33 does not surprise me at all. I thought they'd have a little bit of trouble here at 59.45, which not trouble, but that was my initial target. I remember telling Blake that 59.45. I think it's 59.43. That was the 38%. That was my initial target. I said, well, we were coming off of these lows. We were down here. I said, well, they're going to go for that 38%. And obviously they did make it. They overshot a little bit, and then the market just started working a little bit higher. And then the market got quiet. This is this area right here. Of course, we're looking at a 2-hour chart. This area right here, the market got very quiet. And so people thought, this is it. This is all it's going to go to. And then they screamed and they stopped all those people out. And then we pushed them even higher. You thought I would have thought, as they touched this flag, they probably would have had some trouble. But no, they just kept on squeezing them. But they had a target to go to, which is this zone here, 60.86, 61.22. So they just got just above the 60.86 to make it up to 60.95. And then we dropped them off pretty good, just about the time that everybody thinks it's safe to put your toe in the water. And then they turn around and rip them right back up. And then we just sat there for hours and hours. Look here, in a very tight range. And we just now started going and drop them lower here. So, no, I don't think so. I mean, we're going to go in, and I think we'll make it back here to this 58.33, back here to this zone again. But with the exception of that, I think that and we'll probably see some semblance of a bounce, but I just don't really see that there's going to be, I think the crude will eventually start to work lower. It might fight its way all the way down there, but that's what we got. Let's go and take a look at it on the 30-minute. Just a second. So here we are in the 30-minute, and we just got a crossover for a sell signal right here, just down the 30-minute. So let's go in and push this out a little bit. So you can see, we talked about this a couple days ago, how we got, how the market was sitting here, but that we got a buy signal, and I said, as it starts to break higher, because you saw a lot of choppiness right in here, okay? I go that you had to just go with this, and I talked about how I don't use my moving averages as an outright buy or sell signal, but I use them to go in and point me in the right direction, how I want to trade the market, okay? Well, we got this buy signal right in here, and then, but like I said, we were experiencing a lot of choppiness. But once we got the buy signal, it basically keeps me on the cautious side, saying, be a little bit careful. We're seeing a lot of choppiness. It can go either way, but be careful. As we start to work up here, and we come back here, and obviously this is on a half-hour chart, so it's not like as if we're looking at a 5 or 10-minute chart. As we start to work higher, then you're starting to see that the bears, even though minus this dip here, are really starting to lose their momentum. They're losing the fight here. So as the market breaks higher in here, we're already here on the buy signal, and the market pulls back. But the 30 signal, the EMAs on the 30-minute, the faster EMA never crosses the slower EMA, which would point out a sell signal. So you got to play the market for the direction it's going with as far as momentum, and that was pointing us higher. Which initially, like I told you, I was looking for this 59.36, which was a 38%, and the zone 59.50. And we got up here, and we had some trouble initially. They made it right up to the tick, 59.37. They sold them off. Not that much, though. They only sold them off about 20-some cents. And then they came back and just danced around, and finally they got, scooting on the way up here. And they basically use the top of the zone, the 5950, as a resting board on the way back down. You can see here, it comes back down, pops off of it, and jumps right back up here and goes to these levels. And that's what I talk about. It's all about the levels. 5988, we come up here, we come all the way back down, and we come back into the zone. You see how we just overshot the zone by just a little bit? And we come back up, and look who's holding the market here, the slower exponential moving average. Okay? And then we just start working higher, and then that's when we start squeezing a lot of people on the way up. And then here's this run yesterday, and as I said, the market stayed up here for quite a while. I thought once again, here's that trend line here, and I'm thinking, oh, they're going to have a hard time. And no, they were really holding up here against it. And I'm thinking is because they had squeezed them so much, my thinking is they were just really pulling the people's feet up against the fire. But I'll tell you what, I was even surprised myself. I'm thinking, man, I really don't know what's going on here. These guys are really holding it up here. I figured, I scalped the short, and I figured that when I got in, the bottom was going to go and fall out. And it's not even giving much. So I got out with just, a few pips, thinking, I'm not going to hang around. I don't know how much further these guys want to squeeze it. Maybe they want to take it beyond 6105. And finally, the market gets down and we drop pretty good chunk of change. And we turn around and bring it right back up here in everybody's grill, right up to 6086, okay? Which is, once again, 6086 is the bottom part of that zone, that red zone. And then we just sit there for the longest of time, and then the market backs off, but we're staying quiet. So at this point, you don't know, hey, look, are they going to try and make one more run up here and tag 6105 and then fall apart? But we just start slowly but surely quieting down. We make one more last gasp up here towards 6078, and then we start sliding down. You can see here they just found some support at 6012, you see. So I keep trying to share with y'all, it's all about the levels, you know what I mean? I know I like to chide everybody when I say about all those monkey patterns. That's what I call harmonics. But these markets move from level to level, and that's why a lot of times I draw these zones in, because you can kind of see how the market's playing out. Sometimes it's hard to. Sometimes it'll look like it's real volatile, but it's still sticking within a zone channel overall. When I say zones, I really don't look at zones from a horizontal standpoint. I'm just looking at it, not horizontal, diagonal standpoint. I look at it horizontally. But we have got a sell signal here on the 30-minute. You can see that here. So once again, I do think that we're going to be working lower going into next week. This is what I use for scalping here, which is on the 3-minute, as we come into levels right in here. You can see the action that we had. That was just, I couldn't believe how they were able to hold it here, right in here. And then we came apart, and I'll be doggone if we didn't come right back up here. But this is a good little, this was right here, this looked nice here. As we come back in to test this 6082, right in here, this 83, and you can see how the market used it as a springboard yet at that time. We rally up here, then you get this graveyard doji. But I'm surprised that we weren't able to sell off a whole lot more. The market just basically stood there for the longest of time, not really doing a whole lot of anything here. And eventually we started going to slide lower. Matter of fact, Blake's getting ready to walk in the door. So let's get back in here.